Did you know there is a unique way to spot strong order blocks and make a lot of money? Well, as you know, there are order blocks all over the markets. There are order blocks on the maximum of the chart, on the minimum, in the middle of the trend. There are order blocks on top of other order blocks, as you can see right now. So which one should you take? Well, in this video, I'm gonna show you exactly that. As of right now, we are looking on AUD and GD for our time frame, and we have a demand zone on top of another demand zone. So now we need to decide which order block is a strong one, or maybe both of them are weak order blocks and we should not take either one of them. Well, what we can use is an indicator called the ultimate oscillator, or just UO for short. And this oscillator can help us identify divergence on top of order blocks or below order blocks. And those divergences are gonna be our signals to understand that the order block itself is very strong. So for now, as we can see, we have a demand zone on top of a demand zone. That's one. Okay, we have a bullish harmonic pattern. That's just another confluence that the order blocks can work, because we have a bullish order block, a demand zone, and a bullish pattern. So two bullish signals in one. Okay. Now, if we look closely, the market created a low, a higher low, and another higher low, while the ultimate oscillator created the same exact thing, a low and a higher low. So in this case, it did not create a bullish divergence. So let's continue, see how it's gonna play out. Okay, so the market reached this demand zone, broke it, reached the second demand zone. Okay, and now we see that from here to here, from this low to this low, it created basically a bearish market structure, because it created a lower low, while on the ultimate oscillator it created a low and a higher low. So it created a bullish divergence. A bullish divergence is when the market goes down while the oscillator goes up. So in this case, we can see that the market went down while here it went up. Okay, so it gave us our third signal, which is a bullish divergence. So now we understand that this zone, these order blocks are strong order blocks. Okay, so it will be late for us to re-enter, but we know that if the market will make a pullback, reach those order blocks again, then it will be an amazing opportunity to re-enter the market, because the price already went up from here to here, so we lost a big move. Okay, so for us to enter the market, we want the price to go against us first, and only after that enter the price, enter the market. We don't want to enter the market from here for the price to go against us. So once again, we want the market to go against us first and then to enter the trade. Okay, so let's wait and see how it's gonna play out. Okay, so the price went against us. It created a pullback. This is exactly the opportunity that we wanted for us to enter the market. So I'm gonna place the entry here, stop loss of course below the market structure, and as usual our take profit is gonna be the market high, the closest market structure. Okay, the maximum. Why? Because as you know, when the price reaches the maximum, which is in this case this area, breaks it, it oftentimes will create another pullback. So we want to exit before it's gonna break, before it's gonna create that pullback against us. So let's see how it's gonna play out. As you can see, everything worked fine, even better than expected. Okay, and here is the pullback. So if we were holding this trade, this massive candle will basically bring us almost to the start. So that's why we're always gonna try to enter on market structure, which is usually an order block, and exit on market structure, which is an area where the market reversed or created a pullback. Okay, so this is one of the examples for a demand zone. Now let's see an example for a supply zone. Alright guys, I have found an amazing example for a supply zone. Why I consider this an amazing example? Well, first of all, it's because it already got touched. So, as you know, in the basic theory, the classical theory of supply and demand, if a order block got touched once, that means that it's no longer valid in the future. But by using ultimate oscillator and divergence, we can actually understand if it's valid or not. Doesn't matter if it got touched 1 times, 2 times, 3 times, or 0, okay? Because it is the divergence that is telling us if it's a strong order block or not. Okay, so we see that the price got touched once, it got touched the second time, it reacted, pulled back, touched it again one more time. So as you can see on top, the price created a double top. So it reached a maximum pullback and reached the same maximum again. So because of this move up, this last move up, people, traders, retail traders, they are gonna consider it that, okay, this is not good because it did not react aggressively as usual. So this move up will make people get out of their trade, or people that placed their stop loss and moved it to a risk-free area are gonna get stopped out. But as you can see, it created a double top, 1 and 2, okay? But if we look on the ultimate oscillator, it actually created a lower high, which indicates a bearish divergence. So a bearish divergence when the price created a higher high or a equal high, which basically means a double top, which it did right on this area. Okay, so because of this bearish divergence right on the supply zone, it means that this supply zone is tanked with liquidity and we should actually take it. Okay, so what we're gonna do is we're gonna take our trade, we're gonna place our stop loss above the market structure. In this case, it's above the supply zone, and our take profit is gonna be first take profit here, second here, third here, and the last one will be here on the minimum. Because as you can if you can remember, every time that the price breaks a market structure, it creates a pullback. So in case that it's gonna reverse against us, we're gonna secure some money. So let's see how it's gonna play out. As you can see, it breaks it by a little bit and pulls back, like here, here. And as you can see, this is a amazing strategy for supply and demand traders. I have been using it for 10 years and made millions of dollars. Okay, so start using it yourself right now. Open the chart, find any order block, see if you have divergence there, and start making money. If you do not have a divergence on top of an order block or below it, depends if it's a supply or demand, do not enter the market, because the divergence is what tells us that the order block is strong. By the way, guys, I have a Discord channel, so follow me, subscribe to my YouTube account for more unique secrets like this. and I would like to see you inside my Discord. The link is in the description and in the comments. Have a great day. Make millions of dollars.